Right now, someone you know is leaving Canada or already gone. Maybe it's a coworker who just gave notice. Maybe it's family. Maybe it's you right now, staring at a half-packed box, wondering if you're forgetting something. Last year, over 120,000 people did exactly that, the most ever recorded, going all the way back to when Canada started keeping track. And this year, already on pace to be even higher. Doesn't matter why or what kind of status you had here. Student, worker, citizen, doesn't matter. Almost nobody knows about the one form that follows you out the door. Not because it's hidden, just because nobody ever brings it up until it's too late to plan around it. It might cost you nothing, or it might cost you a number you didn't see coming. Here's the thing. The difference isn't your visa. It isn't how many years you were here. It comes down to one thing. One question, really. Did your real life leave with you? Or is part of it still sitting here waiting for you to come back to it? A home you could move back into? A partner who stayed behind? Kids still in school here? Canada has a name for these. Significant ties. Keep even one of them, and Canada still counts you as a full resident, fully taxed every single year, no matter how far away you're actually living your life. And that's true even if you're sitting on real investment gains the entire time. Doesn't matter. If the ties are still here, nothing about physically leaving changes your tax situation at all. You're still in the system. But actually cut those ties all the way. Sell the home, bring your people with you, build something real somewhere else. And the day that finally happens, something different kicks in. It's called your departure date, and it's the moment Canada draws a line in the sand. On that date, Canada does something a little strange. It pretends you sold everything you own that isn't specifically protected. Not for real, nothing changes hands, just on paper, for tax purposes. Your stocks, your ETFs, anything that's grown in value sitting outside a registered account. All of it taxed as if it was sold that day, even though you didn't sell a single share. Let's make this real with numbers. Say you built up $60,000 in stock gains over the years, sitting quietly in a regular brokerage account, the kind anyone can open at any bank. Half of that, $30,000, gets added straight to your income for your final Canadian tax year. Depending on your bracket, that's a real bill for stock you still fully own, sitting in the exact same account, untouched. Now, here's someone else, same move, completely different numbers. $20,000 sitting in an RRSP, $10,000 in a TFSA, nothing at all outside those two accounts. For this person, nothing gets taxed, not a dollar. RRSP, TFSA, cash sitting in the bank, all of it completely protected from this rule, no exceptions. Same exact rule applied to two different people, two completely different outcomes, one math problem, two very different endings. One more example, because this one surprises people the most. 6 years on a work permit, a rented place, a partner who came with them, some investments sitting in a regular account. Then the permit doesn't get renewed, no choice in the matter at all. Doesn't matter that it wasn't their decision to leave. Doesn't matter they were never a citizen, never held permanent residence. They built real ties here. And when those ties leave with them, the exact same rule applies to them as well. Your status in Canada was never the test here. Your ties were. Now, separate from everything we just covered, there's one more piece. And this one trips people up specifically because it feels connected to the tax, but it isn't. This one's called the list. If everything you own worldwide, and that includes your protected accounts too, adds up to more than $25,000, you have to file it. Not because you owe tax on any of it, just to report what you actually have. So, you could owe zero actual tax, like our second example we just discussed, and still be required to file this list, purely because your total adds up past that $25,000 mark. Miss that form entirely? There's a fine. $25 a day, climbing steadily, capped around $2,500 total. And here's the part that catches people. That fine applies even with zero tax owed. The tax and the list are two separate questions, asking two separate things. One asks what you actually gained, the other just asks what you own, period. And the tax itself doesn't even have to be paid the moment you land somewhere new. You're allowed to defer it with no interest charged, right up until you actually sell whatever it is. One more timing question people always ask, and it's a fair one. Say you sold your home in May and moved out in June. You don't owe a single dollar that same month. Your departure date simply gets recorded, noted for later. The actual filing happens exactly the same way any regular tax return does, the following April, same as everyone else. And if you still own a home here that you haven't sold yet, leaving on its own doesn't tax it. That one just waits patiently until you actually sell it, whenever that ends up being, even years down the road. So here's the sum up. If your real life stays here, you're still fully taxed as a regular Canadian, and nothing about leaving changes that. If your real life actually leaves with you, your investments sitting outside registered accounts get treated as sold on that exact day, whether you sold them for real or not. Visa, citizenship, how many years you were here, none of it decides this. Only your ties do. And if you know someone who's genuinely planning a move out of Canada right now, send them this one first. For your own situation, always confirm the details directly at canada.ca or with a cross-border tax professional before you actually go. If this video made it clear for you, hit subscribe. Canadian Life Simply Explained. See you in the next video.